Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to kick it off, talk a little technology here. Anurag Rana is going to join us. We got a lot of things going on in the tech space. Salesforce not taking over in Informatica. We'll break that all down. Plus, we're going to check in with Sylvia Jablonski. She's the CEO and CIO of Defiance ETFs. Get a sense of what's happening in the world of ETFs, where the fund flows are going. Is it all Bitcoin all the time? So that's all coming up here. Plus, we're going to talk about global energy as well in the back half of this hour. We got WTI crude oil pretty steady here at just under $83 per barrel. Right now, let's kick it all off with a Bloomberg Business Flash. And Mr. John Tucker.
All right, Paul, after the worst weekly sell-off in a year, major averages, they are higher for the most part. 9 of the 11 major industry groups, make that 8 of the 11 major industry groups in the S&P 500. They are higher right now. Financials in the lead, communication services, that's the biggest drag, and that's where you're going to find shares of Verizon. For investors, the focus shifting to earnings, a slew of company earnings scheduled for this week, including 4 of the Magnificent 7 cohort of tech mega caps. Amanda Gotti is the Chief Investment Officer at PNC Asset Management.
Ready or not, here they come. It's going to be certainly a very big week for earnings season. And I think key for us is certainly how a handful of these companies ultimately deliver, given these pretty stretched valuations that we start off earnings season with.
And Verizon Communications beating analyst estimates for profit as it stemmed losses in consumer wireless customers. More people chose premium plans, but again, as I say right now, the stock is down 3.25%. One of the biggest drags right now, the S&P 500. And Tesla's moved to slash prices across its range, a risk-triggering new round in a brutal price war in China. Shares of Tesla right now, they are down 4.7%. Overall, the S&P 500 up just 7 points right now at 49.75. The Dow Jones Industrial Average 41 points higher. That's up 0.1%. The Nasdaq 100 unchanged right now, 17,037. And those yields, the 2-year 2 basis points lower, 4.95. The 10-year is at 4.62, relatively unchanged. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Are you going solo?
Yeah.
Huh?
Just people bailing on me left and right. So anyway, so we got some good stuff going on here. All right, S&P 500, kind of, the markets, as John was just saying, kind of giving up some of those earlier gains in this morning. Still green, but giving up some of the gains here. Let's check in with Abigail Doolittle. She covers all the markets for Bloomberg. Abigail, what are you looking at here?
So last week we had 4 bearish reversals for the S&P 500. That's when stocks start out higher and then close low. It really speaks to a lack of conviction on the part of investors. That has already happened for the NASDAQ 100. John Tucker was just mentioning that the tech-heavy index is about flat, but moments ago it was slightly lower. The S&P 500 well off of its high, so I wouldn't be surprised if that happens. And driving it, we talked extensively before about Tesla. Tesla right now near session lows, down 4.8%, ahead of earnings tomorrow. But of course, that has everything to do with a slew of news coming out of this company, including price cuts in China. They're just talking about how they're disbanding a marketing team that they put into play. Yeah, and so they're really in, what we were saying the last hour, in defense mode, like really kind of trying to plug a sinking ship. Well, not a sinking ship. I feel mean saying that, but
it's interesting. I mean, the conference call tomorrow afternoon at 5:30. I'm actually going to listen into it.
Elon Musk needs to get on there, and he needs to basically disavow what I just said and say that it's not a sinking ship. The ship is just fine. We're floating. We're not plugging the holes. And by the way, this is what we're going to be doing. Now, a piece of it is the robo-taxi. There's these things.
That's interesting. We had Steve Mann on. He's the autos analyst for Bloomberg Intelligence, and he was making that comment. That's Musk needs to talk about the robo-taxi. Up to AI and
growth.
I'm like, okay, but I'm not sure that's the problem.
So I think the problem is,
agreed. I think the problem is the market, it just doesn't know what the end user demand is for EVs, period.
100%. And because of that, they have to create the perception that the growth on these other products is so big that it's going to outweigh that uncertainty. And worst case scenario, if the demand is really down, it's going to really outweigh that negativity. But that stock is down. That's a big weight. It's stunning that this stock is down, I think about 45% this year. But we also at this point have Microsoft, Meta, Netflix down another day, Applied Materials, Lam Research. So some of these chip stocks are down again. Earlier they had been higher. One stock that's staying higher is NVIDIA. You probably missed the huge sell-off because you were probably on the beach by that time. But I was in front of my desk seeing and just kind of open mouth watching NVIDIA down 10%, the worst day since March of 2020.
Was that, going back, was that, in hindsight, was that more of a technical move in the market, you think?
Yes, just too far, too fast. This year's massive uptrend is completely parabolic. From a technical perspective, you can very easily make the case that NVIDIA is going to go back down toward, let's call it 500, basically undo this year's gains.
Really?
That it was over-enthusiasm on the part of investors to have gone that far that fast. It will still be up in a big way, over the last year or two, given that rally. But yes, I think that was a big piece of it. People wanting to hang on to that one and then finally just throwing in the towel. That speaks to sentiment. Tim Stenovec and I were just talking that this reminds us a little bit of the great financial crisis, not to the degree of declines, but I can remember day after day, stocks would start out higher. You'd be like, all right, the bulls are going to get it together. And by then 10:30, down 1, 2, 3, 4%. Now, again, not the degree of selling, but when we're seeing it in these big heavyweights, that's really a problem. But again, to the upside, we have NVIDIA higher. We also have Procter & Gamble, JP Morgan. So, in some ways, there's a little bit of breadth in terms of what is higher.
Right. Well, I like to say to Carol and Tim, Matt Miller and I, every day, we would hand off a positive market, and then they'd come in the afternoon and lose all the gains. I'm like, what are they doing?
You got to stay in the studio all day.
Exactly. We'll see how it goes. All right. Abigail Doolittle, thank you so much for joining us. Abigail Doolittle covers all the markets for us. All right. So my tech M&A bankers are not happy because apparently Salesforce takeover talks with Informatica are cooling off, and that might have been a nice M&A trade in the tech space. Let's break it down a little bit here. Anurag Rana, senior technology analyst. You know him. He's out in Chicago. This guy I don't know, Sunil Rajgopal, senior software analyst. But the good news is he's in our Bloomberg Interactive Broker studio. He doesn't mail it in from Chicago like Anurag Rana does. Anurag, I didn't hire this guy, Rajgopal, did I? I don't know him.
No, Sunil's awesome, and he does all things infrastructure. You'll really like him.
Good stuff. Well, at least he's here in the office. We make note of that. All right, so Anurag, I was kind of surprised to see this news to begin with. Like, I didn't think Salesforce needed to really buy anything. So what's going on here, do you think?
Yeah, it was just a big head-scratcher for us, too, almost a few days ago, because last March, Benioff comes and says, I've disbanded the M&A committee, no more M&A, I'm going to focus on margins and organic growth. And in less than a year, just around that 1 year mark, he's like, oh, we're going to go back and, buy something. Now, he didn't say that, the company didn't say that, but that was the rumor on the street that they're looking to buy Informatica. For us, that was a bit of a surprise because Informatica grows 6 to 7% compared to Salesforce, which is growing north of 10%. So why would anybody buy something that is slow growth? I get the data angle of it, but it was not something that we really liked.
Sunil, first of all, thanks so much for joining us here in studio. Sunil Rajgopal, senior software analyst for Bloomberg Intelligence. Tell us about Informatica. I don't know a lot about it. I don't think a lot of investors know a lot about it, and that was one of the reasons that they're saying, what is Salesforce buying here, or maybe thinking about buying? Tell us about this company.
Sure. Informatica is all about data management, which is about cleaning all the data that comes from different sources and aligning it with the applications and getting all things sorted out for data. So data comes in various shapes, forms, and different sources. So all of that needs to be cleaned up to be used in a proper shape. So I think Informatica is that layer that acts as a cleanser of data and gets you to that right usage. So that's where it comes in as a player.
So if they're not going to tie up with Salesforce, what's the call on this company? What's the call on the stock, either bullish or bearish?
Look, strategically for Informatica, such an alliance would have been a great move that would have helped fuel its cloud journey, and that now accounts for roughly 1/3 of its revenues. With the deal not happening, Informatica now has to focus on fueling its cloud growth organically. The company is boosting its partnership and rolling out new AI-powered features. But this space is highly fragmented and competitive. The company has continued to lose market share, especially with the challengers that have risen substantially over the last few years. There are other big players like SAP and IBM that also compete. So I think going forward, the market will definitely look a lot more challenging because now Salesforce, not having to go through with this deal, will put more resources into MuleSoft, which I think will raise the competitive intensity. And I think that is a big challenge for Informatica going forward.
Anurag, on your side, from the Salesforce side, I mean, is it just steady as she goes? I mean, it's just such a great company. What's the call for the next 12 to 18 months for Salesforce.com?
So, Paul, what we're thinking, hopefully by the end of this year, we get a little more clarity on technology spending. And perhaps from next year onwards, we can see that, low double-digit growth in earnings, as well as, I take that back, low double-digit growth in sales, coupled with some margin expansion, getting you to that mid to high teens earnings growth. That's what we want from Salesforce: organic growth, organic earnings, not so much driven by M&A. And I'm hoping that that's what the company delivers.
Sunil, on the software side, what are the most exciting areas for you that you're looking at here?
Look, for me, in the overall enterprise software space, I still like names in the observability sector.
The observability?
Yeah,
What's observability?
All right. So the observability is they act as a layer that monitors all of your systems, applications. So be it any kind of an application that you run in your enterprise, everything needs to be monitored if there are like any bugs, if there are like system downtimes, etc. So observability vendors typically monitor all your applications and the infrastructure. So they play a very critical role in the overall enterprise software space. And I think players such as Datadog, Dynatrace are very well positioned.
Did that come public recently, like recently, last couple of years?
Yeah, yes, that's right.
So what is, I mean, I love the name. Looking at the stock here, I'm bringing up the stock, Datadog. The symbol is DDOG. It's got a $40 billion market cap. It's kind of flat stock price on the year, but up 75% over the trailing 12 months. What's the call on Datadog here?
Look, it's a very, I would say it has been a fast-growing company, and of course, last year we have seen a slowdown in the overall enterprise software space, and Datadog, of course, has been impacted with that slow IT spending trends. But overall, if you look at the observability space, as we see, I think that is a space that will continue to grow because the number of applications and the infrastructure that enterprises are deploying, especially with what is supposed to come with Gen AI and others, we will continue to see a massive rise in the infrastructure and applications, and that should all bode well for Datadog and players such as Dynatrace and others in the observability space.
Anurag, we've gotten earnings coming up for the tech names. What are you looking for here? Should we be just kind of count how many times they mentioned AI in the conference call?
Yeah, a little bit of that. I think it's going to be a steady growth rate, but I'm getting a little concerned about the guidance because I think the macro environment is getting a little bit dicey, not sure what's going to happen in the Middle East. So I'll be very surprised if any company comes up with a bullish guidance. But I think, one should be prepared for it because we have seen some of these names go up pretty strong over the last 12 months. So there could be a period of consolidation for the next quarter or two. Our big call is that we do see tech spending recovery, perhaps now in the later half of the year into next year. But we don't want any one of that to be delayed. So not baking any massive positive surprises over the next quarter or two, but hoping for a rebound by the end of the year.
So, but a rebound, there's no declines here. Let's be clear. It's just a question, what is the growth rate in tech spending? So just give us an eyeball kind of where we are now, where it has been, and where do you think it could go?
So let's talk about, for example, I'll throw out a number, AWS constant currency growth rate. That's a big leading indicator of what's happening. Last quarter, it was 13% in constant currency. The quarter before that, 12, and the quarter before that, 12. We think this time it comes to around 14, 15, but next quarter again it comes to in that same range of about 14 to 15, because now we are looking at stabilization of the growth rates, but we do expect that to pick up by the end of the year. You can correlate that for any company, whether it's Salesforce, whether it's Microsoft Azure growth rate, a similar chart in the rate of growth of the growth rates rather than anything else. And that's why I'm saying the next quarter or two is where we see stabilization in that rather than a big leg up.
So Neil, in your software space where you play, are your companies trying to glom onto the AI trend? And if so, how are they doing it?
Look, I think most of the companies that I cover are in the initial phase of this AI wave, and most of them are piloting new products, bringing up features like Copilot and others. But one interesting fact that Datadog pointed out very recently is 3% or so of their ARR is being driven by these Gen AI-focused companies, which is interesting that you're still in very early stages, and I think that will be a momentum that will continue to grow.
Are we going to get, Sunil, do you think, like I came up when the internet first started, you had companies come public that were internet names, whether it was America Online, whether it was Google for search, Facebook for social. You had companies that defined or helped define. And then so simple people like me could say, oh, if I want exposure to the internet, I go by Google or by Facebook if I want social. Are we going to have AI-specific companies coming public, do you think?
I think that's a move that everyone is watching. Of course, we have companies like OpenAI and others that are potentially growing in size and have a massive amount of, say users, etc. So that's a market that will continue to be on watch out. And there are a number of other smaller companies that are coming up in the AI space. I think over the course of next 12 months, we will see a lot of them in the market.
All right, good stuff. Sunil Rajgopal, Senior Software Analyst, Bloomberg Intelligence, joining us here in our studio. And, of course, Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence. He's out in Chicago, breaking down what's happening in the world of technologies. Apparently, Salesforce, the rumored discussions between Salesforce and software company Informatica cooling off here. So we're seeing the Informatica stock down a little bit today. We thank both of those guys for bringing us up to speed here. Looking forward here, S&P 500 kind of just staying slight positive here, slight green on the screen here, up 6 points. The Dow's up about 19 points, and NASDAQ's up about 5 points, so just barely hanging on to some gains here. We were a little bit higher earlier in the day. On the yield space, 10-year Treasury, that is also steady here, 4.62% on your 10-year. Looking at the commodity space, WTI crude oil off about 50 cents here. We're about $82.60. Remember, we were pushing up close to 90 just a week ago. Gold, it pulls back. It's off 2%. Haven't seen a down day in gold for a while. $2,335 per ounce for the bullion. Bitcoin giving up some gains, but still up 1.8% here. Bitcoin, 65,800 on the cryptocurrency. We're going to have more coming up on this Monday morning. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're seeing the major stock averages. They're turning mixed right now after last week's big sell-off. In the S&P 500, you actually have Ford Motor, the best performing individual stock. That's up close to 4%. Cardinal Health, the worst performing stock in the index, down over 6%. Its pharmaceutical distribution contracts with Optum RX will not be renewed. Now, as attention turns to the earnings season, profits for the Mag 7 forecast to rise 38% in the first quarter from a year ago. Compare that to 2.4% for the overall S&P 500. This is according to data compiled by Bloomberg Intelligence. Also, tempered expectations for Federal Reserve interest rate cuts. They have rattled U.S. stocks recently. But during previous periods of elevated bond yields, the S&P 500 posted an average price return of 13.9%. That's according to data from BMO Capital Markets, and that goes back to 1990. So take that for what it's worth. S&P 500 right now is 6 points higher. That's up 0.1%. We're at 49.73 on the index. The Dow Jones Industrial Average 13 points higher, and the Nasdaq 100 right now down 7 points. As for the yields, the 2-year is down 2 basis points. That's at 4.95. The 10-year relatively unchanged, and that is at 4.62. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul Sweeney.
All right, John Tucker, thank you so much. We appreciate it. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast here. So coming into today's trading, the S&P 500 was down roughly 5% off of its recent high, and a lot of folks were just saying, hey, is this a bump in the road? Is this the beginning of a sustained drawdown, which may or may not be healthy for this market longer term? That's some of the questions we've been hearing from a lot of the smart folks who cover these markets. Sylvia Jablonski joins us. She's the Chief Executive Officer and Chief Investment Officer at Defiance ETFs. Sylvia, how do you view the trading we've seen over here over the last week and a half here, this 5% pullback in the market? How does that kind of strike you in terms of the overall market behavior?
Good morning. Well, it's been a painful couple of weeks, that's for sure. I think that some new headwinds came into the market, right? That kind of weren't there before. We came out of the gate really strong. The inflation readings were looking, kind of good and solidly pointing downward. And then, we got some hotter than expected factory number, jobs numbers, CPI, and things like this recently. And so I think that until we get the data going back in the direction that we want it to, which is essentially, coming in below estimates and downward on inflation, and then we start to feel the security of the Fed potentially cutting this year again, whether it's 1 or 2 times, and, kind of just knowing that the Fed is still in play, right? And that we're not going to turn around the other way. I think that'll help the markets turn around. And then I think the other thing that, is sort of trepidatious for investors is geopolitics. I mean, there's some, notable things going on in the world right now that I think really rocked markets over the last week and a half. And then I think that there's a need for kind of knowing what happens next there. But in terms of like the fundamentals and the macro picture, I'm still very constructive and bullish on the market, provided that those things, don't surprise us out of left field.
How about on the earnings front here? We're just kind of another real busy week here for the S&P 500 earnings. What do you think this market needs to see? I mean, how dependent? I mean, I know obviously earnings matter, but it seems like this is a market that's been pushed around by the Fed one way or the other here. What are you looking for in earnings this cycle?
So, I mean, I guess the good thing about earnings is over the past couple of weeks or so, a lot of analysts have revised their earnings expectations downward. And so I think that, beats are going to be easier to come by. In terms of earnings, we live in this world now where the Mag 7, maybe we've subtracted Tesla from that list or a couple of names here and there, but the top tech companies, let's call it, as well as NVIDIA, are really, names that investors want good news from. And so then I think if they deliver, that tends to broaden the rally and that tends to lift stocks in other sectors. Bank earnings haven't been so bad, right? And we haven't seen kind of this recent rally from that news. So it's really those names that I think that have to perform. So I'll be looking at that.
So, one of the big themes last year and coming into this year was AI, and obviously NVIDIA and all those types of things. We saw some pretty violent action on Friday, some of those names kind of coming down. Was that kind of a technical move for you, or do you feel like the bloom is kind of coming off the rose a little bit on some of those AI-driven thematic names?
So I think that this is, I always talk about like buy on the dip opportunities. This is it. I mean, I think that with some of the top names, if you're looking to get invested in AI or quantum computing and, you're a stock picker, you're an ETF buyer, these 5 to 10% recent pullbacks in some of these top names are really good opportunities to get back in. AI innovation isn't going anywhere. It's just in the beginning. It's in its infancy. And when you think about when other companies and sectors start talking about how AI has transformed what they do, whether it's the defense sector or, banks talking about better risk mitigation, pharmaceuticals talking about more efficient drug discovery, price discovery, more effective surgeries in the healthcare system, things like this. You're going to start to see how compelling it is to continue to buy these stocks as that innovation builds out. And, we're barely scratching the surface with supercomputing and quantum computing too. So when you have all of this data, it has to be processed quickly. And in order for that to happen, you're going to have to kind of like buy up supercomputers and quantum computers and things like this too. So I just think that it's a great time to get back in or get in if you've kind of had FOMO. Even though the stock prices are high, they have pulled back.
What's the, I guess, at Defiance ETFs, where are you guys seeing the fund flows these days?
Yeah, so 2 places, 3 places really. So we see a lot of flows into target income funds. So the investor that just likes to have that, double-digit monthly return at the end of the month and have broad-based index exposure. So we see a lot of flows into our SPYT and IWMY off of investors that want dividends. But I would say the fund that people are talking about the most and has kind of grown the most, even though it's been around kind of the longest, is quantum. And that's the AI and machine learning, what we were just talking about. I think a lot of investors realize that NVIDIA and AMD, while they own those stocks, there's got to be something else. They don't necessarily know who the winners are going to be or who that something else, what that something else is. And so they liked the, equal weighted basket of 70 stocks that are covering semiconductors, graphics, technology, computers, cloud, cyber, things like this. And so we've seen a lot of interest there from investors.
How about on the fixed income side? I mean, are you seeing money flow in? Because, you can sit there at a 2-year treasury and get close to 5%. I know some folks were saying in some ETFs they were seeing, like the folks at Bond Block, for example, who focus on ETFs, seeing a lot of fund flows into there. Are you seeing that as well?
Yeah, and so when the market pulls back, we definitely see that. We don't see that on our side. We don't really have those types of products. But when you see that, it's usually, it was years of inflation that was too high and stocks that just weren't running, like a 2022 tech recession where you're going to put your money and get 5% treasuries made sense. But I would argue that this year is different. And those trillions of dollars that are sitting in those products and on the sidelines, I think will eventually make their way back into the market. Yes, we've had a 5% pullback, but look at broad-based equity performance this year. I think you'd rather be invested there than you would in treasuries. And I think that that'll slowly start to revert back into the markets, particularly if we get, a broadening of performance in the markets. But for now, market pulls back, you have geopolitical risk, you have, a Fed that's kind of, less iffy about those rate cuts and things like that. And so investors tend to flee to safety.
Suvi, I know one of the names on your list, and we've talked about it in the past, is IBM. In the world of AI or in quantum computing, where does the likes of a IBM play?
Yeah, so it's so funny because I think, and we talked about this before too, it's almost like that sleeper tech stock, right? Just what happened to IBM? And I would say that they're back, they were always here. They had Watson. They're sort of the first, true AI play, I think, but they just weren't kind of known for it, I guess. And now they're coming out of the woodworks because they're doing so much work in quantum computing and supercomputing, and they're, kind of providing services to Fortune 500 companies using their AI technology, but then they're also building and scoping out quantum computing. So they have deals with Cleveland Clinic to create better drugs and pharmaceutical discovery processes. They have a project with Korea Quantum where they're looking at, more precise information around aerospace and defense and then also, military types of logistical projects that they're working on. And, you think about the U.S. government pumping money into, kind of defense and quantum computing and AI as it relates to that. You're going to see IBM have a good seat at the table, I think, in the future.
All right, Sylvia, thanks so much for joining us. Always appreciate getting a few minutes of your time. Sylvia Jablonski, Chief Executive Officer and Chief Information Officer of Defiance ETFs. John Tucker, he is in the studio. We can't get rid of him. John, my personal inflation gauge, I know we're going to get the PCE core deflator at the end of the week. For me, it's daily national average gasoline prices, unleaded, $3.67. I mean, it's kind of getting back to concerning levels.
It's starting to hurt, but I'll take it broader. You look at oil, and that's higher. NYMEX is up over 83 a barrel right now. And I am reminded the number one thing to remember when it comes to the oil industry is that oil is in everything.
Yep.
And that includes the aspirin I just took coming on to be on the show with you.
Right, exactly. Your preventative dose.
My toothpaste, my toothbrush. So, yeah, it's in everything.
It's in everything, exactly. But again, I'm looking at that $3.67. We're down about $3.10 kind of at the beginning of the year. So creeping back up, obviously nowhere near where we were kind of in the early days. But again, big issue there. We'll keep an eye on that, as John was mentioning. WTI crude oil, that's steady today, just above $83 per gallon. I can get it down on Route 35 in Wall Township for about $3.40 a gallon. So I'm pretty good there. With our news in New York City, here's Michael Barnes.
Thank you very much, Paul and John. A prosecutor with the Manhattan District Attorney's Office says Donald Trump orchestrated a criminal scheme to corrupt the 2016 presidential election. The remarks came during opening statements this morning at Trump's criminal hush money trial. Trump faces 34 felony counts of falsifying business records. The defense, in its opening statement, says President Trump did not commit any crimes. The former president spoke to the media before he entered the courtroom.
These are all Biden trials. This is done as election interference. Everybody knows it. I'm here instead of being able to be in Pennsylvania and Georgia and lots of other places campaigning.
Trump denies any wrongdoing. The Supreme Court agreed to take up a Biden administration appeal over the regulation of difficult-to-trace ghost guns that had been struck down by lower courts. The Supreme Court will hear oral arguments this morning in a case that has pitted local officials of Grants Pass, Oregon, against the area's homeless population. City leaders started issuing fines for sleeping outside. Critics of the measures say that the actions criminalize the homeless population who have no other place to go. David Giffen is the executive director of the Coalition for the Homeless.
Criminalizing the victims of our failed housing policy is morally wrong, and it's unconstitutional, and that's essentially what the city of Grants Pass has done by making it illegal for someone to exist while being homeless.
David Giffen with the Coalition for the Homeless. In golf, Scotty Scheffler has won the RBC Heritage at Hilton Head. He had a 5-shot lead and 3 holes to play Sunday before rain suspended play. After a bogey, he wound up with a 3-shot victory this morning. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After that, more than 5% sell-off for the S&P 500. Right now, the major stock averages little changed. Investors focusing on earnings at this point, especially the so-called Mag 7, 4 of whom are going to open their books to investors this week. Now, Bloomberg Intelligence says early results from the first quarter season show earnings are actually offering a solid backstop for stocks so far. The focus on earnings comes at a time when the rally in stocks has been derailed by the jump in bond yields. Now, while some investors are entertaining the idea of a Fed rate hike, Bob Michael at J.P. Morgan Investment Management says that kind of misses the mark.
Over the last 12 years, no one on the Fed has ever believed that rates had to be higher than 4.25%, maybe 4.5% as a long-term neutral rate. And here we are, 5.25%, 5.5%. I put those things together. I can't really believe that we're going to see anything approaching a rate hike over the next year.
Right now in the S&P 500, financials, the best performing industry group, materials, the worst performing industry group. That's where you're going to find shares of Newmont Mining down about 3.5% as gold drops right now. It is down 2.5%. Overall for stocks, S&P 500 16 points higher. That's up 0.3%. We're at 49.83 on the index. The Dow Jones Industrial Average of 44 points. That's up 0.1%. 38,026 on the index. The Nasdaq 100, that has been a volatile session. Right now, it's 50 points higher. That's up 0.3%. Mentioned the bond yields, 2-year, that's down 3 basis points. That's at 4.95. The 10-year, I'm going to call that unchanged at 4.61. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul.
And that's it. John Tucker. It's just me by my lonesome here. Paul Sweeney in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. Last week, Alex and I were at the Bloomberg BNEF conference. That's New Energy Finance. These are the folks that really look at the energy space in depth, including all the new energy businesses that are being created across the world. Really looking at it from the business.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
spread, obviously, to Yale, where they have now arrested, I think, almost 50 protesters. And of course, we're about a week or two out from a big commencement season. So I think this is unfortunately probably going to get worse before it gets better, because if you want to make a stand and make a statement, commencement is a big time on a university campus to do this. And of course, to your point, we had the president of Columbia testify. She then came back to New York, called in the NYPD to remove these tents and protesters. And then, of course, they came back. You know, New York is not really prosecuting misdemeanors. There were like 100 arrests, and now they are back. And of course, as you said, Monday, today, classes online. You've got the leader of the Hillel and Columbia warning Jewish students to stay away. So a very precarious time on campus, and a lot of fear about the terror that is going through the minds of Jewish, not only current students and faculty, but prospective as well, because you've got people visiting who may want to come to the university. And so this is a big concern. And, you know, we just think historically of Columbia, it was the heart of the protests in 1968. And here it seems to be happening again, and those spread in the same way this threatens to.
47 students, to Jeannie's point, arrested, pro-Palestinian protesters arrested this morning at Yale University. I read the statement from Doug Emhoff. Rick Davis, President Biden himself said this blatant anti-Semitism is reprehensible and dangerous, has no place on college campuses or anywhere in our country. Is this the right posture for the White House, or do you need more? You do wonder if it is a government answer here, if the school is not capable of dealing with this on its own. Jeannie, I mentioned Gottheimer, Moskowitz, Goldman, elected officials arriving on campus today. Of course, that's New York, New Jersey, and Florida. I don't know what else comes from this, but on the Senate floor, we're going to probably see Bernie Sanders talk about conditions placed on Israel funding. I know that the immediate answer is there's going to be a deal on debate and they're going to knock that down, but how important is that moment going to be for the progressive left?
It's critically important. And this is partly what is driving some of these protests. And I think we have to be very careful to differentiate between people who are peacefully demonstrating and protesting versus anybody calling for or engaging in violence or intimidation against other people, and where they're doing it on private property like Columbia versus in the public sphere. So there's a lot to distinguish here. But I think that, you know, hearing from the people like Bernie Sanders as it pertains to this aid is critical, because again, the aid to Israel has been without condition, and that is something that is being called for and should be debated on the floor. And of course, as we just look at the vote over the weekend, one of the things that has astonished our Ukraine allies is while aid has been going to Israel unconditioned, theirs is conditioned, and they're about 6 months away from being overrun by Russia. So the differences there are dramatic and important, and I think having that conversation on the House floor led by somebody like Bernie Sanders is going to be critical. But to your point, they will pass the aid bill, and they should at this point.
Yeah, obviously, we'll have a lot more time to talk about kind of the ins and outs of the vote over the weekend here. But how difficult could this debate be on the Senate floor, specific to Israel. We spend so much time talking about conservative Republican opposition to Ukraine. Rick, are we going to get a taste of this from progressives in the Senate? We're going to have a lot more to talk about on this with Rick and Jeannie in our second hour. We've just learned from the White House that President Biden spoke today with President Zelensky in Ukraine, as the White House says in the readout, to, quote, underscore the U.S.'s lasting commitment to supporting Ukraine as it defends its freedom against Russian aggression, unquote. A lot more from our panel on this coming up in hour two. As we turn to another major story today, I won't say it's the other because we have several, but that's the opening statements in the criminal trial of Donald Trump in New York. The first criminal trial, the hush money case. Court has already adjourned for the day, but the defense and prosecution have laid out their cases here, and we have a moment to review what we learned with June Grasso, of course, the host of Bloomberg Law. She joins us from World Headquarters in New York. June, what did we learn in court today?
Well, I think we learned sort of what we knew. There was nothing astonishing that came out at opening statements. The prosecution tried to paint this as a criminal conspiracy, and he mentioned Donald Trump, Michael Cohen, and David Pecker, who is the National Enquirer, the head of National Enquirer, being involved in this conspiracy, and he talked about that, whereas the defense tried to downplay the whole thing. The defense attorney at one point said, what on earth is a crime? The 34 counts are really just 34 pieces of paper. And I think one thing we learned is that the defense, much of the defense is going to be an attack on Michael Cohen, who is the star witness for the prosecution. They went after him really hard. They said he was obsessed with President Trump. He was disbarred. He's a convicted felon and a convicted perjurer. So I think that's where we see the case going.
David Pecker got on the stand, at least for a moment, right? What are they going to say about the first witness?
Well, I think he's a great witness to be there first because he doesn't carry the baggage that Michael Cohen does, and he can set out. So they were sort of starting today, we're talking about basics, about the National Enquirer, about checkbook journalism. And I think the idea with the prosecution, too, was to get a witness on, one of their witnesses before the jury broke for the day, instead of having the defense, what the defense said in the minds of jurors. So I think, he's going to be a pretty powerful witness if he says what the prosecution says he will say. That's gonna
He was granted immunity back in 2018, June, when investigators were looking into this, catch and kill scheme. And this had to do with the Karen McDougal story, $150,000 to bury her story of having an affair with Donald Trump. Does that granting of immunity in that investigation give him any particular standing in this case now?
Well, I think that it's going to be brought out on the defense that he was granted immunity, and that's why he's testifying. But that happens, every day across the country in trials, state trials, federal trials. So I don't think it's really going to have much of an impact here. And I think that he's going to really be the witness that's going to be able to set the whole thing out, because coming up, as you know, Stormy Daniels and Karen McDougal is going to testify as well. So I think that, he's going to be, if he holds up on cross, which I don't know what the defense, I really don't know what the defense has to attack him with besides the fact that he has turned, he's a turncoat witness, that whole thing. So, we'll see. They started out with him, so that means they have a lot of faith in him presenting their case.
Right. Yeah, that's why I ask about his credibility. I'm fascinated in advance to hear from him.
Yeah.
June, tomorrow, Judge Mershon holds a hearing on the gag order. What's going to happen?
Wow, that is a tough one. The problem is that Judge Mershon doesn't have many things he can do to Donald Trump right now. He's not going to jail him. I mean, he could, but that's absolutely not going to happen. He can fine him $1,000 for each of these occurrences, but it's really important that the judge make it clear to Donald Trump that he can't do what he's been doing. He can't, especially because we see what happens with the jurors here. If the jurors are mentioned, it's going to be really a problem for the prosecution if they start to lose jurors because of what's said about them or because they're afraid of what might be said about them. So I think the judge is going to try to make it clear what has to happen, and maybe there'll be a fine, but I doubt it'll be much more than that. We'll see.
Okay, got it. And then the next, as far as moving on with the trial, that's not till Thursday, right? We've got a half day for Passover today. We've got the gag order tomorrow. Wednesday's off, and Thursday is our next day of focus.
Right. There might actually be some testimony tomorrow. I'm not sure, but there might be some testimony.
Okay.
The gag order takes place at 9:30. So after that, they could bring David Pecker back and do that. Otherwise, it'll be on Thursday. You're right.
All right, perfect. Well, look, I want to just say June Grasso is bigger than this trial, but her program has become a one-stop shop if you want to know what's going on in the hush money case in New York. Right, June? It's great to have you as always. Bloomberg Law, 6 p.m., right after Balance of Power here on Bloomberg Radio. With a lot more to learn later on. There's a little taste for you. I'm Joe Matthew in Washington. Kaylee Lyons is on the way in next as we approach hour 2, only on Bloomberg.
of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The bills have passed the House. Now let's follow the money. Welcome to the fastest show in politics. As a foreign aid bill, including money for Ukraine, now heads for the Senate this week, the president says he's ready to sign it. I'm Joe Matthew alongside Kaylee Lines in Washington, D.C. And Kaylee, after a busy weekend, the wait continues in Ukraine.
Yes, it does, although certainly there seems to be a degree of optimism if you listen to the likes of Ukrainian President Volodymyr Zelensky over the weekend, that the aid does seem to be on its way. It's not done and dusted yet. You do still need that vote in the Senate. There is potential for that to slow down if any one senator should decide they would like to do so. But we do expect that it will pass, go to the president for his desk, and then it's for his signature on his desk. And then it's a question of just how quickly this aid will translate into real change on the ground for Ukraine.
We're going to spend some time exploring that this hour with Kelly Grieco, an expert on asymmetric warfare and the hardware that Ukraine has been calling for, exactly what the strategy will be when they get this shipment. Kaylee, we just learned a short time ago that President Biden spoke with President Zelensky today following this passage in the House over the weekend. So while the wait goes on, to your point, some are suggesting it's already improving morale knowing it's coming.
Yeah, there certainly could be a psychological impact as well. So Ukraine is really waiting for this to come. Of course, we're also waiting to find out whether Mike Johnson will actually face a real firm threat to his speakership as a result of this aid getting through the House. So we're going to have more on that with Jack Fitzpatrick of Bloomberg Government coming up in just a moment. First, though, as always, we got to start with a check on the markets. And John Tucker has that for us today up in New York. Hey, John. Hey,
Kaylee, and we are following the money. It is green on the screen. Dow Jones Industrial Average right now up 212 points. That's a rise of 0.6%. The S&P 500, 31 points higher. That's up 0.6%, just shy of 5,000. The Nasdaq Composite Index right now up 102 points, up 0.7%. After 3 straight weeks of declines, the stocks are finding some support today. Earnings, they are taking center stage. Best performing industry group in the S&P 500 that belongs to financials. This after the regional banks opened their books today. You have Verizon Communication shares dropping after the company reported continued customer losses. They also saw some lagging revenue at the company. And the real action, that's going to come with 4 of the Magnificent 7 mega caps reporting this week. Now, overall, their profits are forecast to rise 38% from a year ago. And that's according to Bloomberg Intelligence. Most active stock, Tesla. That is down about 3.3%. We got word over the weekend they're cutting prices in China. It's also worth noting the UK's FTSE 100. That closed at a record high for the first time in more than a year. They've been boosted there in recent months by energy-related stocks. Also, a broader optimism that maybe some of the geopolitical risks are starting to ease. Once again, the S&P 500, 32 points higher. We have yields, the 2-year yield in that space down 2 basis points. That's at 496. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues with Joe and Kaylee.
All right, we're here in Washington. John Tucker, thank you very much. I am Kaylee Lines alongside Joe Matthew here on Bloomberg Television and Radio. And here in Washington, Joe, it does seem like there is somewhat of an upbeat mood because something actually got done, at least in one chamber of Congress, as we await the second chamber, the Senate, to pass it. But it took months and months and months for foreign aid to actually pass the House of Representatives, but it has now done so.
Well, that's right. We were told by the administration at the end of last year that the window was closing in Ukraine. How they have managed to get by to this extent is frankly a mystery to a lot of folks. They've been dug in some cases, waiting for artillery for weeks on end. There was a unit we read about last week in Politico that had been waiting for a month for shells to arrive, and now they are going to be sent that way. The question is how quickly that can be done. And again, we'll be talking to Kelly Grieco about that coming up from the Stimson Center, who was with us recently, Kaylee, talking about the run-up now. I'll be curious to hear her take now that it's actually happened, as I am also curious to hear from Jack Fitzpatrick, our appropriations expert, had a working weekend following the ball here on 4 bills that are going to be now stitched together into one and sent to the Senate. All the while, we're wondering what happens to the Speaker of the House. He's at Bloomberg Government. Jack Fitzpatrick Great to see you. Probably feels like Wednesday or something to you at this point. Mike Johnson has a couple of days, I guess, to breathe. When lawmakers return next week, is there in fact going to be a motion to vacate? The lawmakers who have signed on to one seem to think that they're going to force him to resign. Why in the world would he do that?
I don't think he would. It does seem that Marjorie Taylor Greene is not backing down. She says that she's going ahead with forcing a vote on this motion to vacate. She's been tweeting about it.
Yeah.
It doesn't seem like a major danger for Johnson. It's been a while now that we've heard that there are Democrats who don't want to see him ousted over allowing a vote on Ukraine aid. So there are a few hardline members who certainly, unless they back down, are going to force a vote, but it's not as tough a situation for Johnson as it was for McCarthy. I think there's some fatigue with the palace intrigue and the politicking on the House floor that dominated people's attention for so long. And Democrats don't want to punish the speaker for allowing a vote on a bill that they liked.
Well, we certainly have heard from Democrats on this very program. Congressman Ami Bera of California, Adam Smith of Washington, who also expressed that, essentially, that they think the speaker did the right thing here, so why would they not protect him? So I guess maybe that is why it will turn out differently for Mike Johnson than Kevin McCarthy. I want to ask you, though, just around this idea in the Senate, because we're all kind of operating under this, that this could happen quickly. It's going to pass. Yet we know it's the U.S. Senate, and if you don't have unanimous consent, things can move slowly. Any one senator could be disruptive. Are we going to face that potentially around amendment votes and the like?
Less than we normally would, because congressional leadership was on board and put things in the rule in the House and package this in a way that kind of expedites it. Usually it takes, if you don't have unanimous consent in the Senate, it can take about a week to pass something. That's probably cut in half or even less because they packaged this into a bill that had previously been taken up in the Senate. There's no work to do on the motion to proceed. I could talk for an hour about the procedural aspect of this. Long story short, if a lot of people want to slow this down, it could be a 30-hour delay between voting to limit debate and then passing it, but that's not nearly as bad as if it could take a week, which is usually what can happen. So they don't really need unanimous consent. Congressional leadership worked together so that this is going to get the initial procedural vote tomorrow. It might be late tomorrow, or it might take until Wednesday to actually pass it. It's not entirely clear, but this is not going to drag on throughout the week like Rand Paul at one point had threatened.
Safe to say the majority of senators want to get out of town and get their recess started. So what's most likely at some point on Wednesday we wrap this up?
If not late Tuesday. It could be late Tuesday. It could stretch into Wednesday. One person can still slow it down, but if a lot of members don't want to take up their time to debate, we're probably talking much less than the 30-hour period. So either Tuesday or Wednesday, and this does seem to clearly have the votes. They voted previously on a foreign aid package already. All facets of this.
That was 70, if I remember?
70 for that. So all of these got more than 300 votes in the House, so it looks good in the Senate.
Could it lose some votes, though, because the TikTok divestiture ban, divest or ban, has been included?
That is one of the most interesting parts of this, because the packaging of this was more about the political question of, do the hawks stand together? Do the neoconservatives stand together and do what they want? And this was sort of a hawkish packaging of things. The TikTok ban doesn't really have anything to do with Ukraine aid, right. But this came together as essentially a show of political willpower by the Republican hawks, the governing wing. It all fit together politically, so I don't think that would necessarily lose a lot of support in the Senate.
All right, Jack Fitzpatrick, who covers Congress for Bloomberg Government, thank you so much. As always, certainly we're all going to keep an eye on the Senate over the course of the next day or two to see when this thing actually can head to the president for a signature. And we know the president of Ukraine certainly is waiting for it. He talked this weekend on NBC's Meet the Press. Here he is.
This aid will strengthen Ukraine. We did lose the initiative there. Now we have all the chance to stabilize the situation and to overtake the initiative.
And we want to get more on how exactly this will help Ukraine and how quickly with Kelly Grieco. She is Senior Fellow with the Reimagining U.S. Grand Strategy Program at the Stimson Center. Kelly, it's always great to have you here on Balance of Power. What is your assessment of just how fast this aid could change the situation on the ground for Ukraine?
Well, thank you for having me. I think, I think there's two parts to that answer, which is, one, I think within a few days, once it passes the Senate, certain critical things like artillery can probably be delivered to Ukraine, though it might take longer for Ukraine to distribute that within the country. And then other systems that are stateside will take longer to be able to deliver again to Ukraine. But it will, it will be weeks to months probably before it has a very significant effect.
That sounds like a painfully long wait if you're an under-resourced Ukrainian soldier in the field. Kelly, how much of this will go to weapons or equipment that has yet to be made? We've all been learning about the defense industrial base over the course of this debate, and I know that much of the weaponry still needs to be actually manufactured. So will this be rolled out over the course of the rest of this year?
Yes, I mean, this is exactly the challenge, right? Is that there's funding, but you need to be able to buy something. And a lot of these things have, as you said, not been made. And many of these high-valued systems that are in low quantity, like Patriot missiles, have also been promised to other countries. So one of the issues that needs to be addressed is where the priority is going to be in terms of Ukraine, perhaps sending more of those missiles that were intended for others to Ukraine, and that still needs to be worked out. So that's certainly going to take time.
Well, and as we consider time, Kelly, it also raises the question of how far $60 billion in aid goes in a conflict like this before more aid might be needed if there's no real end in sight. Is this money going to bring us closer to the end of this war or just prolong it further because it gives Ukraine longer to have a fighting chance?
Yes, so this is really where I'm the most concerned because I supported, providing Ukraine with more aid, particularly for artillery that it desperately needs and the United States is able to provide. But I think you're asking the right question, which is we need to start thinking really seriously about long-term strategy here and pivoting from a talk about liberating all Ukrainian territory and militarily defeating Russia to how do we create a credible, sustainable defense for Ukraine? Because this is a war of attrition and it's stalemated, and bringing it to the negotiating table. It goes back to what General Mark Milley said about a year ago when he was still chairman of the Joint Chiefs of Staff, which is that this is a war that's going to end in negotiations. And so we really need to start thinking about what is the strategy to get there.
Well, that's awfully important then. A little more on that, Kelly. What would that look like? You just got $60 billion here. You've got a finite amount of time to work with it. How does Ukraine deploy that money in a way that would, in fact, strengthen its hand at the negotiating table? I'm guessing that's a strategy of its own. Does it need to start punching through Russian lines? Does it take down the bridge to Crimea? Is there something specific that would help?
Yeah, I think actually it really needs to focus on defensive systems and defensive fortifications. So if you think about when Ukraine went on its own counteroffensive, which failed, it was partly because Russia had devised really dense, thick defenses fortifications. So anti-tank obstacles, well-defended trenches. And so Ukraine is starting to do that, but it's months behind in its preparation. And I think that's actually one of the areas where we could really help is sending some of those that capability, some of the concrete, the construction equipment, not just advanced, missiles and artillery. And I think, though, it really is about a long-range shift in perspective. Already, as soon as it passed, this bill passed, you started hearing, talk about 2025, Ukraine returning to the counteroffensive. And, we don't want to repeat Groundhog Day here and waste sort of this capability going on a very costly counteroffensive that's unlikely to succeed. So I think it's coming to terms with the reality that Ukraine should focus first and foremost on holding the territory that it has.
Well, Kelly, when we think about a potential future counteroffensive, it really just brings us back to the idea of the force that Ukraine is trying to counter, which is Russia. How is Russia likely to respond knowing more assistance is coming Ukraine's way? Does it change what they will do in real time in the interim and potentially make this a more dangerous moment for Ukraine while they wait for everything to arrive to them?
Yeah, I mean, it's clear the Kremlin's not happy. They've, issued their usual kind of statements indicating that. It does create a window for Moscow in terms of how it's thinking about launching an offensive, which is expected this spring and summer, and that it might be thinking now that it has a window of a few weeks to a few months to try to do that when Ukraine is at its maximum vulnerability. And that's possible. I don't know, though, if the Russians are really capable of being that agile to speed things up. They haven't really shown that during the course of the war. But I think the real issue here is that Russia thought its strategy was that it could outlast Western support, including U.S. support for Ukraine. And this is certainly sending a signal that that strategy is not working. And so the hope I have is that there will be more pressure on both sides of this conflict to head to a negotiating table. And there's supposed to be some kind of, diplomatic effort in June in Switzerland. And I'd like to see both parties actually attending that and really working towards some kind of settlement.
Spending time with Kelly Grieco from the Stimson Center following the passage of Ukraine funding in the House and the expected passage of Ukraine funding in the Senate. Should Joe Biden go back? And I ask you that because morale has been as much of an issue as equipment and materiel. So have troops, by the way. Kelly, in our remaining moment, I'd love for you to focus on that. Whether or not the president should be there again. This does not buy more manpower for Ukraine. What does it do about the issue of bodies on the battlefield?
Yeah, I mean, at the end of the day, this is Ukraine's war, and that includes manpower, as you suggest. And Ukraine took months trying to pass a bill to lower the recruitment age. I don't think that Biden is actually all that important a visit from him in terms of morale. I think, Ukraine has to do that itself, and they have been very determined, and that's something I think for their leadership to work out.
It's great to have you back, Kelly. Stimson Center Senior Fellow with the Reimagining U.S. Grand Strategy Program, Kelly Grieco. Thanks for joining, as always, here on Balance of Power. It's going to be pretty quick from here. It sure seems like after what we just heard in the last 10 minutes here, Kaylee, there's going to be an agreement likely on debate in the Senate. This could be done tomorrow. We could be talking about a law by Wednesday morning.
Yeah, I guess if all the timing works out and President Biden would very likely give its signature to that bill almost immediately after we know that the president did speak with Volodymyr Zelensky today, underscoring the U.S.'s lasting commitment to supporting Ukraine. But just because this passed, Joe, there is still the question of how much more lasting that commitment will be as this conflict potentially goes on well into the future.
That's for sure. And it sounds like the narrative is going to be very quickly coalescing around an end game here, the negotiating table, and how this money can help them get there. With Kaylee Lines, I'm Joe Matthew. The panel's next on Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The stocks, right now, they're drifting higher. Yeah, but the S&P 500 shed 5% over the past 3 weeks. We've switched from worries over some of the geopolitical concerns to a focus on earnings. It's a big week for earnings reports generally. Roughly 30% of the companies in the S&P 500 are scheduled to say how much they made during the year's first 3 months. That includes several companies that have come to be known as the Magnificent Seven. 4 of those are going to report this week. Verizon Communications helping kick off this week's reports by disclosing a drop in profit. Its shares right now down close to 4%. Then you have Truist Financial among the regional banks reporting today. Profit better than expected there. Those shares up about 4.7%. The financials, the best performing industry group in the S&P 500. Most active shares of Tesla after announcing those price cuts over the weekend. They are down about 3.4%. Overall, the S&P 500, 38 points higher. That's up about 0.75%. Above 5,000 again, 5,005 in fact on the index. The Dow Jones Industrial Average up 253 points, and the Nasdaq 100 right now up 127 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of power continues with Kaylee Lyons and Joe Matthew.
All right, John Tucker up in New York checking on the markets. Meanwhile, me, Kaylee Lyons, and Joe Matthew are here in Washington checking on whether Marjorie Taylor Greene seems to have changed her mind yet about whether she thinks Mike Johnson should keep his job as House Speaker. Well, as of an hour ago, Joe, it does not seem so. Her latest post on X, Mike Johnson still hasn't shown Congress or the American people the proof that Russia intends to invade the rest of Europe after finishing its campaign in Ukraine. It goes on for a few more sentences and ends with, "We need a new speaker," 2 exclamation points.
Okay. The refrain, though, over the weekend from Marjorie Taylor Greene, Tom Massey, is that they wanted him to resign, that they would ratchet up the pressure until Mike Johnson had no other option but to leave on his own. And, of course, Kaylee, he already articulated last week the words, "I will not resign," leading us to doubt that as a viable option. But they could pull the trigger on this. He could still lose his job. And so we may as well dive in there with the panel, right?
Sounds good.
Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors. I have to apologize to both of you in advance. I really don't want to do this to you every day, but it's hanging out there. Jeannie, what are we going to do about the motion to vacate, or should Mike Johnson resign? That does seem to be what the 3 Republicans who have their name on this believe. All the while, some are arguing he's more powerful now that he got these bills passed. What do you think?
Yeah, he seems to have found the secret sauce, which is, 100% Democrats, 50% or so Republicans, and he can pretty much pass anything there.
That's the recipe,
I think it's probably not what the Marjorie Taylor Greenes of the world want to hear, but, I think as it pertains to his job, number one, who wants it? Number two, I think he's probably safe until November. It depends, obviously, on what happens in the election. And I've never thought he had a real shot at keeping the job next year. I, in fact, think that's more likely now than I did before. But I think for the moment, he's probably safe. That doesn't mean she can't move forward on the motion to vacate. But I think we're hearing enough Democrats who would be there to support him, and that would keep him safe at least until probably November.
Rick, when we think about Mike Johnson staying safe, especially if the cost of staying safe is having Democrats step in to help you, is he safe with no real power? You keep the gavel, but your ability to wield it for your own purposes is kind of not really there because you need Democrats to do anything and your own party has members that really would not like you to be in the job. I just wonder how we think about what safe is for Mike Johnson.
Well, there's really nothing safe about ever being a speaker. So the whole concept of safety is not really relevant to politics in general, because you never know what shifting alliances are going to occur. And of course, in this day and age, when you have such a divided country that's extremely well represented in almost a completely divided House of Representatives, there's no place to hide. There's no safe place. And so I think that the Band-Aid has been ripped off. I mean, we now have a coalition government in the House of Representatives. And that coalition government will probably stick together between now and the election because there's nothing new to happen, right? They can just band together and pass whatever they want. And frankly, the things that would get passed probably find ready acceptance with the president and with the Senate. So they could actually be a more productive House of Representatives between now and Election Day, even when usually that's when people shut down and they go home to campaign. So it's an odd upside down world we live in, and it's currently being well represented by the House. So my guess is there's no fear at all of Marjorie Taylor Greene. This motion to vacate will be tabled almost immediately. And so the idea that they have any leverage over Mike Johnson is a fantasy. So I think we're going to see the rest of this Congress be a bipartisan year in the House of Representatives. Certainly not where we thought when we started this year.
Well, God knows it's not then, Jeannie. Is there a way for Joe Biden to leverage a so-called coalition government here on Capitol Hill to maybe sneak something through in a campaign year that could make a difference beyond what's just happened?
Yeah, you know, I don't know that I would believe that in a Congress which has passed 69 or so bills, one of the lowest in history, that in months before an election, the president of the opposition party could pass through much. I mean, it's possible, but I think Joe Biden has got to be very happy with what happened over the weekend and, quite frankly, what he has been able to accomplish in this Congress, because it has been, I think against all odds that he has gotten through what he's gotten through. So he's got to be happy. He's moving on the campaign trail. I do think we may see a little, a little dust up in the Senate with some of this, as they move forward. I think they're going to move quickly on this, but I think it's fascinating. People like Mike Lee trying to force an amendment that ensures that Ukraine pays back this money. I mean, the sort of parts of this that we're hearing, there's not just, inter-party fighting in the House. It's also in the Senate. You look at J.D. Vance and Lindsey Graham. So I think there may be a little conversation there in the next 24 hours or so, but they want to get out this weekend. So I think they're going to, this week rather. So I think they're going to pass this pretty quickly if they can.
Yeah, I guess the difference maybe, Rick, would be that in the Senate, the Republican infighting is in the minority where you didn't have that much power anyway, versus in the House, it's in the majority, which has rendered the majority a little less useful perhaps than a typical majority would be. I just wonder, given everything we've seen and what you were just speaking to, the idea that something did pass, it was in a bipartisan way, which probably is what the majority of the American people would like to see. Have the Republicans improved their odds of being able to retain the House in November, especially if we don't see another chaotic go around for a new speaker because Mike Johnson gets kicked out?
Yeah, last first, yes. I think this last week has been a step in the right direction for members, especially in the more swing districts, who can go back and say, hey, I got Ukraine funding, I got funding for our allies in Asia and the Middle East. And there'll be some explaining to do about the TikTok ban. But other than that, I think that the reality is this is actually going to be helpful to Republican members going home. And it's not that it's not helpful to Democrats, but I think it's a good incumbency racket to have passed this bill. I think that's why you saw so many members of Congress being for this, because it's good politics and it's good for the country. That being said, I think we have to get away from this whole idea that anybody in the House has leverage. It's going to be, sort of like, whatever coalition you can bring to bear. And with one vote margin of majority, the concept of a majority is kind of thrown out the window. So getting things done like the Farm Bill and the FAA reauthorization, these are big things, right? That have been stymied. You couldn't even get a rule for any of this stuff in the past. Now you're going to have Democrats in a rules committee voting regularly to get things out. Now that they've gotten it done once, why not do it more often? So I think it completely changes the dynamic in the House of Representatives. It's like a different chamber now than it was a week ago, and maybe for the positives for American taxpayers.
It's a different chamber. I'm going to have to start watching these Rules Committee hearings to see what Chip Roy does in the face of this coalition government. Jeannie, lastly, Joe Biden is talking about Earth Day today. He's going to be campaigning again this week while Donald Trump is in and out of court. I presume it helps him from the making good on promises file here to say that we are standing by our allies. I got this across the finish line. Is that enough to make up for all the young people who are going to be angry with him and with Democrats about TikTok?
You know, I don't know if it's enough to make up for it. And I think the anger amongst young people, and we see it just in, you know, the NBC poll out, I think it was yesterday. It's a big problem for him. And the biggest challenge there has to do with what's going on in Israel. So, you know, I'm not sure the passage of this bill helps him with that constituency. And it's something he really needs to work on, because the numbers are really problematic as it pertains to enthusiasm amongst that group. And so, you know, he can talk about this success, but I'm not sure it's a message he would want to take to college campuses, quite frankly, at this point.
All right, Rick Davis and Jeannie Shanzano, our Bloomberg Politics contributors, thank you very much. And of course, Joe, college campuses is where we see kind of an overlap in this Venn diagram in many ways. On the one hand, you have a lot of people who are getting news and information from TikTok. There has been a lot of conversation as to whether or not there is a pro-Palestinian bent in some of that content they will see. And of course, you're seeing like what we're seeing at Columbia, where they've had to move classes online because of the goings-on of the last several days.
And again, the White House stepping in to condemn what's happening on a college campus. It's pretty remarkable what's happening there. Whether TikTok ends up being banned, though, you know, this may not be answered even during this campaign cycle if we enter this protracted legal challenge that we're hearing about. By the way, Bloomberg Intelligence, we love talking to the analysts at BI about, they're running odds on this, Kaylee.
Yeah.
And they say 70% odds the government wins the legal challenge by TikTok, that it will, in fact, go through the legislature and the courts.
Well, and then it becomes a question, what does TikTok do then? Or specifically, what does ByteDance do? Do they agree then to the divestiture? Do they hold on to the algorithm, though, which would make maybe the whole thing worth a lot less than it would be otherwise? There are so many remaining questions, and we're going to be digging a lot more into this in just a few minutes. We'll be joined by Mark Ginsburg, former ambassador to Morocco, but also the president of a coalition for a safer web. So stay tuned for that, and stay tuned right now for world and national news. Amy Morris has that in our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Opening statements and the first witness have already happened in Donald Trump's criminal trial this morning. The first witness was called, former tabloid publisher David Pecker, whose testimony so far was providing background on his job. He returns to the stand tomorrow morning. Now, during the opening statements, the prosecution said Trump orchestrated a criminal scheme to corrupt the 2016 election, while the defense team took aim at Stormy Daniels, accusing her of trying to extort Trump. Court adjourned early today for Passover observance. And while Donald Trump was in court, his attorneys were just down the street in another courtroom defending his $175 million bond in the former president's civil fraud case. New York Attorney General Letitia James wants the judge to reject the bond and give Trump 1 week to find a new one.
The money was put up, it's $175 million, and I don't think she's complaining about me for the first time ever. She's complaining about the company. But why would she be doing that when I put up the money?
Attorney General James is concerned the company behind the bond, a Knight Specialty Insurance Company, doesn't have enough collateral to pay it. And in golf, Scottie Scheffler has won the RBC Heritage with a 3-shot victory. This win is Scheffler's 4th in his last 5 starts. That includes the Masters. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
right, I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Right now, we're around the best levels of the session as the focus for investors turns from geopolitical to, well, how much money companies are making. A big week for earnings for the Magnificent Seven opening their books to investors this week. And after its sell-off, you have shares of NVIDIA today repairing some of the damage from last week. They are up right now 4%. And Verizon Communications helping kick off this week's reports, disclosing a drop in profit. And Verizon shares right now down just about 3.8%. The most actively traded stock in the S&P 500, that belongs to Tesla. Of course, they announced more cuts to prices over the weekend. That is down almost 3.5%. All 11 major industry groups in the S&P 500 right now, they are higher. We're being led by the financials. This comes after the regional banks reported their earnings. You have Truist Financial up 3.7% for one of the bigger gains on the market. It reported better profit for the start of the year than analysts had expected. Right now, the S&P 500 up just about 50 points. Again, we're above 5,000, 5,016 on the index. That's a 1% pop right now. Dow Jones Industrial Average up 320 points, and the NASDAQ Composite Index is up 172 points. That is a rise of 1.2%. We'll take it. Balance of Power continues with Joe Matthew and Kaylee Lyons.
John Tucker, thank you, and welcome to the Monday edition of Balance of Power here on Bloomberg TV and radio. Indeed, I'm Joe Matthew alongside Kaylee Lyons in Washington with something to show for their work, Kaylee. The bills passed the House, and they're headed for the Senate tomorrow, and that includes TikTok. We've spent a lot of time talking about Ukraine and Israel. The divest or ban TikTok bill is part of the so-called sidecar that will all be stitched together here and sent to the Senate. I told my 16-year-old over the weekend that it was entirely possible now. They were going to ban TikTok if they couldn't find a buyer. And he did not believe me. He's tired of hearing that.
Well, we've heard it repeatedly for some time now. And to this point, ByteDance's lobbying efforts against any kind of bill that would see it divested or banned were working until I guess maybe they stopped working, because we now have a piece of legislation that is very likely to pass the Senate and get the signature from President Biden, although there is a longer window here for that divestiture. Initially, the bill that first passed the House was 6 months.
Yep.
Now they're going to have up to a year.
That's right.
The question is, does ByteDance use that year to actually try to find a buyer for its U.S. TikTok arm, or is it just going to use that year fighting this thing out in court?
Well, we know that the court's coming. It's a question of
Yep.
whether, I guess, they try both, because also the Chinese government has to sign off on this as well,
That's
right?
true.
We've got a lot of big questions to ask about this.
Yes, and we have some of them now for Mike Shepard, who is a senior editor for technology and strategic industries here in Washington and is joining us in studio. So, Mike, if we could first just look at the way that TikTok, or ByteDance specifically, is likely to respond. Already they're signaling, nope, we're taking this to court. We are not going to go down without a fight, essentially.
Yeah, you're right, Kelly. And in fact, they made clear in their statement overnight while we were preparing to get a good night's rest for today in this big week of news that they were going to fight this in court pretty much as soon as President Joe Biden signs it, as soon as the ink is dry on his signature. And they are making clear that this fight will be waged on First Amendment grounds, too. They see this as an infringement of people's freedom of expression and also the impact on businesses. There are a lot of small businesses that use TikTok to reach niche audiences of consumers. And so their argument is going to be on the speech grounds and then also on the business grounds as well.
So a year is the timeline. Could the legal effort last longer than that? Or maybe a better way of asking it, could the legal effort last longer than November? Because a lot of this is going to key off of who wins this election in terms of the long game.
Well, as we've seen in previous court battles involving companies and politicians and the government, of course, lawyers have a superpower in being able to drag things out. In fact, if you look at Donald Trump, we've been talking about his legal proceedings. The cases, each of those cases has been kicked down the road to some degree or another. And with so much at stake here, and especially given not only the national security grounds that the U.S. government is alleging are at stake in this case, but also the geopolitical and diplomatic stakes with China. This is a very sensitive case. And so it will be handled carefully by whatever court picks it up. And the lawyers from both sides are going to be looking to, the government may want to move faster, but certainly ByteDance's lawyers will want to take their time.
Okay, so it may take a great deal of time for this to actually play out in court. But in the hypothetical scenario that the U.S. government comes out on top, that ByteDance challenge does not work, and it really is faced with this option of divest or get banned in the U.S., what is that divestiture actually likely to look like? Who is a realistic buyer for a company that could be worth tens of billions of dollars and also could raise antitrust concerns if another tech company were to try to absorb something of that size?
And these are great questions that you're asking here, Kaylee, because the mechanism of the divestiture is going to be incredibly complex, not only in the antitrust grounds. I think, though, we have to back up a little bit because there are a couple of steps that we need to clear before we even get to the point of an actual sale. A, the company would have to agree to it. B, the Chinese government would have to sign off, and that they are already making clear that that's a no-go. And then even if they do agree to a sale, would that come with the very thing that any sensible buyer would want? And those are the algorithms, the crown jewels of TikTok, the thing that makes it so good and that makes it work. Now, assuming that's all in there, and I'm highly skeptical that each of these hurdles would be cleared, then you would have to find deep enough pockets to buy this, to fend off the antitrust questions, and then somebody be willing to take on the risk. This is a lot of user data, and you have this lingering concern that there might be some still existent connection to China.
So it sounds to me like you just outlined the case for a ban. It may be impossible, if I'm reading you correctly, to find a buyer who could check all of those boxes.
Well, if not a ban, then an outright ban. In other words, you talked about your son and the interest in keeping TikTok alive and the inability to suspend disbelief that, wait a minute, this app that I've come to know and love will go away. It could exist, but just not on the app stores. The bill would require the app stores to delist it. But, kids and users have a way around these things.
Well, like VPNs. Sure. I mean, as someone who had visited China several years ago, and I wanted to be able to use Facebook on my phone. I already had it on my phone. I probably couldn't have downloaded it while in China. Got a VPN, could use it fine.
Worked fine.
Basically, this could just make the U.S. with this particular app look a lot like what people have to do in China and using other apps that are banned in China.
Kaylee, you also brought up another good point, and that is the election. A year from now is a long time. Now think about it. If we have a change in administration or changes in Congress, we could perhaps see another move to maybe defuse or defang this in some fashion. I'm not saying it's going to happen, but I wouldn't rule out maybe some attempt by if it becomes a Trump administration that's incoming, they may seek to try to stop this from actually taking effect. Remember, Trump was the one who had signed the order initially seeking to ban TikTok.
Right.
But now, a month ago, he changed his tune. He said he thought the legislation was a bad idea because it would give, in effect, too much to Meta. And of course, he has an axe to grind with Facebook over him being banned there after January 6th.
Well.
Yes.
Not dealing with TikTok on its own right, but just don't want to strengthen the other guy in this case. You said something important, though, about the crown jewels. That's the algorithm. Let's say Steve Mnuchin or somebody stands up. Let's say it's a patriotic move. They buy this thing for more than it's worth. God knows what's going to happen. But without the special sauce there, this could become a really different product. It could be one that my 16-year-old doesn't care about anymore, right? Because the algorithm is the essence of the business.
Well, that's what makes it work. That's what makes it distinctive. Now, somebody like Steve Mnuchin could find a group of investors and technologists to maybe get it pretty close. Is it close? Is it close enough to Coca-Cola? Right, exactly. But people have there are Coke people and there are Pepsi people, and if the TikTok person finds the new flavor just a little bit off, or maybe not serving the purpose that they have in mind, because as I said, there are also businesses who have been using this to target their audiences. People with very niche businesses, if they make something and knitting or crochet or makeup or whatever, something maybe related to sports. They have a way, a pathway to that audience of consumers that they have built up over this time.
Well, of course, we've all seen the advertisements, I'm sure, part of TikTok's lobbying effort against getting banned with highlighting businesses. I think I saw a beekeeper that made like honey products or soap or something like that. There's veterans involved really trying to take their case to the public just as much as to Capitol Hill. Totally.
We agree with it or not.
Yeah, fair enough. Final question, just because you raised the election. Regardless of what happens in court or whatever, we're talking a year window in which TikTok will assumably be fully operational, nothing will change. How concerned should we be about the information, misinformation, disinformation that could be propagated on that platform in the run-up to November in the interim?
Well, Kelly, when you talk to the proponents of the legislation, that is one of the very reasons that they argue for a ban. They are saying that there's already so much misinformation out there that's skewed and distorted. And in a way, the social media platforms in general have stepped away from any kind of role in being moderators of content. They don't want to have to take ownership of or responsibility for specific material that could be disinformation. They really just want to say, hey, this is town square. It's up to you to figure out who you want to trust and who you decide to believe in. And this is the case here with TikTok. But the trouble is, since it does have this foreign tie, you know, you talk to national security experts here in this town, many of them will say, be careful.
Great to have you in studio with us, Michael. Congratulations on the new title as well. Senior Editor for Technology and Strategic Industries, which means you're going to be spending a lot of time on stories like this one, and we'd love to continue tapping your expertise here on Bloomberg. Great to have Michael Shepard with us as we add the voice of former Ambassador Mark Ginsburg. He spent time as U.S. Ambassador to Morocco, bringing us his geopolitical view, is also now president of the Coalition for a Safer Web, and has a good sense of what we're talking about. Mr. Ambassador, welcome back to Bloomberg. It's good to see you here. We've talked about so many variables. I wonder what your thought is. Assuming this is passed tomorrow and is signed by the president, we then enter a protracted legal battle. How will that end?
It's hard to tell. With the negotiations in Congress, and I worked up on the Hill for 7 years, when this bill originally came to the Senate shelved it because there was fear that TikTok would actually be able to prevail in a constitutional challenge. It's been tightened up considerably in order to prevail in any TikTok-induced constitutional challenge, because they're surely going to go to court. At the same time, it's probably not going to take effect for at least a year under the current legislative framework. There's also an opportunity that this could be subject to a filibuster by Senator Rand Paul. So it's not a sure bet that it's going to breeze its way out of the Senate shortly.
Okay, so there still could be fights ahead, whether it's in the Senate or whether it's in the courts moving forward. It does raise the question, though, Mark, and we were just speaking with Mike about this. I'm not sure if you heard him, Ambassador, but essentially around the idea of the misinformation or disinformation that could be making their way to TikTok users as they continue to use the platform in the run-up to the election. How concerned are you about what's happening in real time, not what could happen a year from now when it's time to either divest or get banned?
I read the National Director for Intelligence 2022 report on the midterm elections. That report was probably one of the most important triggers to get a ban on TikTok. Why? Because the Director of National Intelligence report assessed that ByteDance, the parent of TikTok, was conveying privacy information back up to the Chinese government, and that the Chinese government was tailoring the ByteDance TikTok algorithms to interfere in the 2022 midterm election. They got away with it. And if they got away with it in 2022, they're going to try to get away with it in 2024. As long as TikTok is tied to ByteDance, and the Director of National Intelligence assesses that continuation of Chinese government interference in our election is going to remain unimpeded, I'm all in favor of worrying every hour of every day until the 2024 election is over with what ByteDance and TikTok are up to.
Well, we've got a lot to learn here. Obviously, there are questions, Ambassador, about the algorithm. Is it possible to have a TikTok 2.0 if ByteDance is removed, if the Chinese government is, in fact, removed, and there's an American operator here? Could it be the same product?
Yeah, listen, algorithms are not necessarily limited by national boundaries. I mean, surely, of course, the particular TikTok algorithm that was developed by ByteDance is proprietary. I don't know whether the Chinese government and ByteDance will permit the sale of those algorithms. They've insisted in any statement that is made on this legislation that they will not permit those algorithms to be conveyed to a private equity firm that Steve Mnuchin, the former Secretary of the Treasury, has claimed that he wants to gather in order to purchase TikTok. Can an alternative algorithm be produced in order to substitute for the existing algorithm? Well, there may be a TikTok disruption as a result. I do believe that it's not going to be easy to replicate the proprietary algorithm as quickly as some people may think.
All right, Ambassador, it's always great to have you here on Balance of Power. Too short, but we hope you'll be back soon. That's former U.S. Ambassador to Morocco, Mark Ginsburg, now president of a coalition for a safer web. Of course, this is a story, Joe, we will still be on top of this evening, the 5 p.m. edition of Balance of Power.
You said it. We'll take this up again with votes in the offing tomorrow. This could be done on Tuesday, Kaylee. Bloomberg Business Week starts right now.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. Carol Masser along with Tim Stenivek live here on Bloomberg Business Week. And let's get to the setup on, it's another Monday, April 22nd, 2024. And Tim, we've got equities kind of taking a bit of a breather from the rout that we've seen of the last month that raised something like $2 trillion off of stocks. We're actually above 5,000 once again on the S&P 500.
Okay, well, this is investors get ready for a big week for earnings.
I think it's the biggest of the quarter, isn't it?
That's what I heard.
Yeah.
From you. A big week for mega cap tech earnings. We're going to look at how high the bar is, considering valuations.
Newsflash, everybody.
You learn something new every day from Carol Masser.
We're a little wacky on this Monday. All right, folks, as Tim said, it is a big week for earnings. Also, we're going to talk about Tesla, which is one of the big reports coming out this week. That's after the close tomorrow. But again, Tim, a company that's often got a lot of chaos, but it seems like that's kind of ramped up a lot.
Yeah, tricky week, too, for investors as bond traders look to record treasury auctions and a crucial inflation reading as well.
Yeah, and also we're going to get to the other legal issue that is top of mind this week when it comes to former President Donald Trump. And then Goldman Sachs ditching robo-investing for the masses. And Tim, did you know it's a big week for earnings?
I did. I heard that somewhere.
It's going to be one of those days. All right, let's get a check on the trade. Over to John Tucker. He's in for Charlie Pellet. Hey, John.
Don't be stealing my thunder. S&P 500, yes, above 5,000 following its 3-week losing streak. This is, in fact, the best level of the session right now. The financials, best performing industry group, as the regional banks delivered their results. NVIDIA looks like it's repairing some of the damage from the sell-off that we saw. It is up around 4% on the day. Among the leaders in the S&P 500 in terms of index points. Cardinal Health, that is one of the laggards in the index, along with Verizon. Cardinal Health's pharmaceutical distribution contracts with United Health's Optum RX will not be renewed. Then Verizon reporting continued customer losses as well as lagging revenue. 30% of the companies, here's the answer to your question, 30% of the companies in the S&P 500 scheduled to deliver earnings this week, and that includes 4 of the so-called Magnificent Seven. S&P 500, 61 points higher, up 1.25%, 5,028 on the index. The Dow up 415 points, and the NASDAQ Composite Index right now up 205 points. That's a rise of 1.3%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Bloomberg Business Week.
It's a big week for earnings.
Yeah, what did I say? 30% of the S&P.
Yeah, I think I heard that from you, John Tucker.
I think actually it's more than, isn't it more like 40%?
I confirmed what Carol said earlier. No, what did I say? 30. Well, I wish you would listen to this. 30% of the companies in the S&P 500.
Oh, okay. I'll remember that. I'm taking notes.
All
Wait,
right.
Listen to John Tucker. All right, there is a lot going on. As John just said, we're pretty much at our highs of the session when it comes to the equity trade. We're going to talk a little bit more about that a little bit later on in the hour. Meantime, investors are no doubt about it bracing for a tricky week, even beyond the risk of further volatility because of the tensions in the Middle East. Making it even more interesting is Treasury auctions this week.
Yeah, the market must absorb a combined $183 billion calendar of 2-, 5-, and 7-year note sales. It's the first, Carol, too, of which will be at record levels. And then there's also some more.
All right, so with more on the week ahead, back with us is Bloomberg News rates reporter Michael McKenzie. Michael, thank you so much. He's joining us here in studio. So first up, let's talk about the U.S. Treasury trade ahead of what you say will be a very tricky week for investors. Where are we kind of starting out on this Monday?
We're a little bit lower in the front-end yields, but only by a touch. If we look at the last month, we're up about 40 basis points for 2-year yields. We're very close to that sort of 5% level. Now, we've got a record-sized 69 billion auction tomorrow. It'll be interesting to see how the price performs tomorrow morning, because typically the primary dealers who underwrite these auctions like to cheapen the issue up. So they sort of push prices down, push the yield up. And the big thing is, are we going to see a 5% coupon? We'd need to see the market trading about 502 at the moment for a 5% coupon to be nailed on. We haven't seen that since last September.
So what happens if we do see a 5% coupon?
I think you get a lot of buyers. I think people would love the 5%
I'll take
coupon. That said, it's kind of an interesting market at the moment, because if we look at the futures positioning that came out on Friday, we've got a lot of shorts coming in the front end of the Treasury curve in futures from hedge funds.
Yeah.
In contrast, we've got the asset management community saying, I really want to own this stuff. So we'll see how it comes out in the wash. But I think around these levels, at least the indication I was getting from talking to investors, they're long the front end, they like the front end, that market's taken out a lot of rate cuts for this year. They think things are fairly balanced, and front end paper at 2%, at 5% makes a lot of sense.
We're going to talk stocks with Gina Martin Adams in just a moment. But, you know, what's interesting is, too, is I think about how many times, Tim, over the last couple of months, we were just talking about all the money on the sidelines and the trillions in money markets and where it's going to go in the equity side of things. I am curious how much actually goes into the Treasury curve, right? If you're seeing, or the Treasury trade, for investors who might say, wait a minute, I can lock this in.
Yes, and I think that's what people are telling us. So we've spoken to Capital Group, PIMCO in the last week or so. They're seeing a lot more interest coming from particularly private credit. You know, these investors have been putting their money away for a long, long time, looking at, say, 9-10% returns. Now they're sort of saying, well, I can just get 5 if I put a little bit of leverage through repo and buy some short end, sort of 2-year, 3-year corporate, very high rated paper. I'm getting the sort of 7%. Sort of that's pretty good without all the sort of, you know, having to lock your money up for a long period of time with private markets. So I think that's some money that could come off the sidelines. Larry Fink talked about this. He thinks that could be a big trade.
Yeah.
So again, BlackRock's going to talk his own book here.
Right.
But they think a lot of money is coming into bonds. So
does that type of money, does that stay at the front end, like when people talk about private credit doing, like, would it stay for the duration?
Yeah, because you'll be rolling down the curve. So as the Fed starts to cut rates in the next, year or so, even if they wait a year or so. But let's say the Fed waits a year and then they actually start cutting, then that 2-year yield will be falling. Yeah. So you pick up what they call the carry. So again, that's explains, it's pretty geeky, but that's why the bond guys are sort of like the front end of the curve here, because they don't see much of a rise in rates from here, given that the Fed is kind of on hold at 525, 550.
So do you feel like that's in terms of where we top out? And we've kind of gone along this ride with you about 4.25, and it.
I know.
I'm not. No, I'm just saying. I think it continues to catch all of us off guard.
Well, I guess to your point, it's a tricky week because at the end of this week we get the PCE inflation number, right? Now, if that's surprisingly higher, I mean, people do expect a little bit of a pickup given what we saw from CPI earlier this month. But if that comes in, above expectations, then the front end does get repriced again, because that's when you start wondering, okay, is this a Fed that may have to do the unthinkable, come back and hike again? But I think that, for me, that from what people are saying, it's very much a tail risk. But again, it's a Fed, data dependent. It's a Fed that's told us, well, if we can't get inflation under control, the next move.
And we already got a shift, I feel like, in the last week, big time, right?
We have.
And for Jay Powell to finally kind of, confirm
Jay Powell, I think, he kind of said, look, clearly we're going to have to stay. But he's saying we have to stay on hold for longer, right? So at the moment, that's the trade. If they stay on hold for longer, then where front-end yields are around 5%, that's fine. We're not yet having that conversation. That, again, we just have to see how the data unfold from here.
Okay, speaking of data, I just want to end with a little bit of bringing in some other voices and kind of hearing what you're saying, what you're hearing too. Rick Reeder over at BlackRock told us earlier that the Fed can still cut twice this year. He's brought down interest rate exposure, sees better U.S. inflation data ahead. How's that jiving with what you're hearing from folks just over the last few days?
I think that's generally the prevailing thought here.
He thinks in the next couple of months we're going to get better inflation data.
Some people aren't willing to really, to be honest, buying the 2-year here at 5%, you've got time on your side. Yeah. I mean, the market's still pricing in one cut for this year. That's, November, but that won't happen because that's right before the election. So effectively it's December. But again, if you get a little bit of softening in the inflation numbers in the next couple of months, then you could probably open the door to a September cut. The problem then, of course, is the comparisons, year-over-year comparisons for inflation don't look so good in the second half of this year. So you could it's still going to be tricky waters here for the bond market. And again, and to a degree for equities as well, if they watch what happens with rates.
I would also argue, right, that the Fed now needs to see 2 or 3 inflation
that's a good point.
Prints that are going down at this point, because we've just had, 3 or
the golden word
that
for the Fed
up.
is confidence. They need to have the confidence that they've got inflation under control. And I think that's such a nebulous term now. Who knows what that really means from Fed speak.
But you just then start to look at the calendar and the Fed meetings, and you kind of just start to put it becomes clearer, I feel like, in terms of the picture. Michael, thank you so much. Busy week, we know, when it comes to the Treasury trade this week. Also very busy when it comes to earnings. About 180, I think, S&P 500 companies. John said representing around 30%, but I think it's more than 40% of the index's market cap. But we have the expert who's going to tell us.
I'm not going to argue with either of you. How's that?
All right, so let's get to it because some of who are reporting, we know, are among the Magnificent Seven names, some of the big mega cap tech companies.
Yeah, we're talking about Alphabet, Meta, Microsoft, and Tesla. For more, let's bring in Bloomberg Intelligence's Director of Equity Strategy and Chief Equity Strategist, Gina Mard-Adams, who's here in our studio. Gina, you and the team have a note out that talks about so far, it's early, but so far the earnings season is giving us a pretty good backdrop for stocks. Bring us up to speed here.
Yeah, so I think it's been an interesting earnings season so far because we've had some really big charges from healthcare companies, Bristol Myers Squibb and now Gilead, who have both taken down estimates for the S&P 500.
I thought that was so interesting, like that one or
just
two names.
Those tiny, just those two companies, which really kind of escape our notice because we're so captivated by tech, have actually made the bigger impact on earnings. Nonetheless, when you exclude those two charges, you're tracking about 5% earnings growth for the S&P 500, including analyst estimates for what's to come. That's a bit better than the analysts were forecasting at the start of the season, which was just under 4% growth. So better than expected, but all the big companies have yet to report. We've got 37% of the market cap reporting this week, including the biggest names, Microsoft, Alphabet, and Meta. TMT is really where all the growth is expected to come from, so I'm a little old school. TMT is no longer the way we describe it. It's tech and communications, but those two sectors are TMT.
That's news to me.
For those of us that have lived, through the 90s and beyond.
We can still call it telecom.
Exactly.
The 90s were good.
Nonetheless, those groups are basically driving all of the growth on the index this quarter, so that's where all of the optimism lies and certainly where most of the risk lies as well.
Well, it's interesting. And, when we get to things like margins and different ways of kind of looking at the quarter, I mean, is there anything of note that you're focusing on that front?
Yeah, so margins are incredibly important because margins are where all of the analyst optimism is going forward. There's a couple of ways that earnings can beat. You can see top-line beats, which certainly would be very, very welcome. Analysts are not anticipating a whole lot of top-line growth to emerge this year. Or you can see margins beat expectations where analysts are already anticipating margin improvement coming through the year. So I think that there's a bigger risk in margins than there is in top line growth just for this reason, given expectations that are implied by the market as well as by analyst forecasts. Margins so far are coming in pretty strongly. We see the vast majority of companies beating on net income margins. Operating margin is still a 50-50. Where there is still a decent amount of operating risk, but net income margins companies are beating so far. So it's something we'll watch, especially with respect to tech.
Why do you think we've seen a steeper sell-off for misses so far this quarter? Why, I know expectations are certainly high, and this is earnings-driven, but why is this quarter they're particularly sensitive?
It's mostly, I think it's a function of we're early yet, more than anything else. So I don't want to draw too much into that. But we have seen companies respond pretty negatively to misses. I think it's a couple of reasons. The first is financials didn't start us off on a great foot. Even though companies generally beat expectations in financials, there's a lot of nervousness about what's going on in that space.
It felt that way as we went
and it felt weak. Yeah. So that was a pretty weak start. Let's see where we go from here with respect to price performance following earnings. The other thing just to consider is some of this could be spurious, right? It could just be the market at large is selling off. And when the market at large is selling off, the misses appear to be enormous price responses, even when all it really is everybody's just selling risk.
I always feel like your tone, and I feel like your tone is a little bit more subdued or more cautious. Has it gotten that way?
Yeah, so not necessarily because of earnings. I think earnings are still a pretty solid backstop. But at the end of the first quarter, when we run through all of the different models that we use to assess the equity market, the technicals actually were signaling a weak time to coming into the second quarter. Not necessarily that earnings are problematic, but things are more difficult now for a lot of reasons. Technicals, correlations inside the market were flagging a great degree of risk. Industry signals, all of our leading industry cues were turning over at the end of March.
All of them.
So semiconductors, home builders, transports, all the leading indicators of what you would anticipate were starting to turn over again. This doesn't mean a horrible climate, but this type of risk was flagged also to us back in July of last year. when we were, turning over into a 10% correction in stocks. So I want to, be a little bit conscious of this. The technicals are quite weak. We started off on weak footing. That said, the economic strengths and the earning strengths have only improved over the last 6 to 9 months. So there should be some offset there, but it does imply a choppier climate for Q2.
But what has come at the same time, and perhaps the reason, is the Fed chair actually talking last week about dialing back and resetting rate expectations. And we certainly saw some selling last week. And even this quarter on the S&P 500, we're down 4.2%.
Right.
Today's recovery, quote unquote recovery notwithstanding, but I'm wondering how you're thinking about that.
Yeah, I view what happened at the Fed as an amplifier of existing trends, not the spark, right? We already saw markets turning over in anticipation of some greater weakness emerging over the second quarter. We saw that with the end of first quarter surge into a new high, and then we started seeing a turnover. So while the Fed speech last week was important, it merely amplifies what was already happening in the equity market. And I think if you read through to the stocks and sectors that performed poorly last week, I think what's really happening in the market is a lot of fear with respect to can tech continue to hold up amidst this environment of rotation, which really started to go all the way back at the beginning of March. We started noting rotation emerging in the equity market, this leadership transition. If tech's not the leader, who is the new leader? That creates a little moment of anxiety for the equity market at the very least, and may certainly stall the advance.
So the S&P back above 5,000 today. Last week was what? The worst week in over a year. S&P down about 5.5% from the March 28th peak to this past Friday. NDX, NASDAQ 100 down about 7% between that March 22nd high and last Friday. That is some of the nervousness we're starting to see. Could it get worse? Are you expecting more downside on these indexes?
Look, I think if the tech companies cannot satisfy expectations and keep raising forecasts going into the rest of the year, yes, it could absolutely get worse, because tech has been such a big part of the market's optimism so far this year. Now, one thing is happening in the first quarter that I think is pretty notable, and maybe is also behind this recent rotation in the market, and that is, this is peak earnings growth for tech. It is peak quarter. Between last quarter and this quarter, we're peaking, and we will have to see some earnings deceleration, at least according to the analyst consensus. Will the tech companies tell us it's not decelerating or not? Could be a key question over the course of the next few weeks.
A lot to keep us busy. All right, Gina, thank you so much. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, here in studio. Coming up, we're going to talk a little bit about chaos. Not chaos theory.
No.
Just life at
a company that I think perhaps might not surprise a lot of people. A big story out over the weekend. Some might say it's par for the course over at Tesla, but at a decent, or recently, what's happening?
Yeah, it's pretty amazing. We're going to explain on the other side. It is the Bloomberg Big Take. More on Tesla when we come back. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, right now they're at the best level of the session. In the S&P 500, you have all 11 of the major industry groups. They are higher right now. And there's been a shift. The best performing industry group right now, it's switched from financials to information technology. And of course, information technology, that's where you find shares of, yes, say it along with me, NVIDIA, recovering a good part of its losses last week. You're late on the uptake there, up 4.8%.
We're late about everything today.
You got to listen. You got to stay with us. Earnings season underway, 30% of the index reporting this week. That includes 4 of the so-called Magnificent 7 stocks. Verizon, they reported results this morning. Those shares right now, they are down 3.8%. Dropping after the company reported continued customer losses and revenue also lagged. Tesla, I know you're going to be talking about that in just a moment. Those shares are among the most actively traded right now. Shares of Tesla down 3.4%.
That's because you listen.
I do listen. Well, most of the time anyway. And that mostly has to do with the fact that they cut prices in China. I don't know why you're shaking your head there, Tim. We check the markets all the time, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg.
It's like having the hall monitor.
Too much fun. Not allowed to have this much fun.
Okay. All right. I'll be more serious.
All right. John mentioned Tesla. Tesla shares are down about 3.4% today. Results for the quarter, they're coming after the close tomorrow. There's a full plate of questions, to say the least, around the company and the business, Tim, heading into those earnings results.
Yeah, including, as today's Bloomberg Big Take points out, how Tesla, a company that's accustomed to chaos, is dealing with chaos on a whole new level. Tesla shares are down more than 40% so far this year, off another 3.4% today, as we just heard from John Tucker. With more on the Bloomberg exclusive and most read story, Bloomberg News global auto editor Craig Trudell joining us from London. Craig, a flurry of Tesla stories today about the overall high level of chaos at the company, price cuts in China, Tesla cutting its marketing team. I just want to start with the level of chaos around this company, because anyone who's been covering this for years understands that's sort of the way things go when Elon Musk is in so-called demon mode or production hell. A reminder, Bloomberg Big Take by Ed Ludlow and Dana Hull. Still, though, Craig, this is a lot even for Tesla.
Yeah, it to me feels maybe as close to 2018 as we've been in quite some time, and so let's hope he doesn't go on Joe Rogan and indulge in drugs and maybe tweet something he shouldn't. But absolutely, it's been an extremely hectic few days. The price cutting left and right. Canceling the trip to India, I think, was a huge story because, a lot of people were counting on, a big investment announcement in India to be this sort of, thing to talk about as a next growth initiative. I think the combination of that and the real concern about whether or not this company, is actually going to make a cheap $25,000 car is really what's giving a lot of people pause, because this company talked about, by the end of the decade, selling 20 million cars. You really have to have, a Toyota Corolla or Honda Civic Fighter to have any chance to get to those sorts of numbers.
There's good chaos and sometimes there's bad chaos. And I'm just wondering, for a company that is known, we've all gotten accustomed to it, right? There's individuals in our sphere, in our life, that we're like, okay, it's Elon. Like, he'll figure this out, right? He'll work it out. But Craig, what are you hearing, you guys, and Ed is hearing, and Dana, in their reporting and the story that you edited, what are we hearing about kind of internally how people feel things are going, and what really is kind of importance, and what are the focal points for the company?
I think the big concern is that, this is not just a case of externally, investors and analysts being concerned about, whether or not that $25,000 car is going to make it into production. It's inside the company. There's concern about this idea that Elon cannot be convinced to follow through with that product, something that, by the way, he himself referred to, back in 2020 as something that was kind of on the docket. He's having to be talked back into that over and over again, because he's convinced that what Tesla ought to be focused on and pursuing, in his words, going balls to the wall toward, is autonomy. And, this is, as we've alluded to, a very colorful character. He says some things that, most people wouldn't dare. I think the robo-taxi bet that he's making here is just extremely risky. I can't sort of say it, emphasize enough just how difficult it's going to be to get these onto the road, keep, not only get regulatory approval, but keep it. And look no further than the handful of companies that have done that already, a Waymo or Cruise, the GM self-driving company. All it takes is an unfortunate incident with a pedestrian or a cyclist, and boom, you're off the roads. Well, and they're betting it all on that.
Craig, one thing, there's one side of me that says, and I think the world would say, hey, never rule out Elon and his method and his mode. And then there's the other hand, and that's industry folks and investors and folks like yourself who have followed the auto industry and talked to people who follow the industry. I mean, what do they say is really what has to happen at Tesla?
Well, and I absolutely hear that same thing. Everyone said you couldn't, launch rockets and land them back on a barge.
Exactly.
And Elon did that. And to his credit, and everybody, did doubt left and right whether or not, the Model 3 would succeed, and then the Model Y, whether that would succeed. And to Musk's credit, those two electric vehicles have absolutely changed the auto industry, and the Model Y was the top selling vehicle in the world last year, which is an incredible feat. But the question is, how committed are you to making a lot of cars and selling a lot of cars? And the sort of ways in which you do that tends to be continue to add to the lineup, continue to update your vehicles. To Tesla's credit, yet again, there is continuous changes that Tesla customers, existing customers and new customers can expect in terms of, innovations and little tweaks here and there. But for the most part, these, vehicles look the same that they did, in a Model Y's case, launched in 2020, Model Y's case, 3-4 years before that. And people want something new. People want something different. And, when the Cybertruck is potentially the only vehicle that you launch over, roughly a half a decade span, that's just not going to cut it, especially when that's such a polarizing, expensive, difficult to manufacture vehicle.
Well, let's talk a little bit about another element too that I think a lot of investors would argue is really important to Tesla's future, and that's a $25,000 vehicle. We talk a lot, Craig, about all the EVs that China is producing at an even lower price point than $25,000. What is the future of Tesla's $25,000 vehicle, and where does it fit into the roadmap that investors are looking for?
I think that's one of the revelatory things about today's big take is this idea of it is the case that absolutely is being sort of put off to the side. This idea that Musk was getting cold feet about this back in 2022, according to Walter Isaacson's biography. And as of the time that book was published, by then there was talking into this idea of yes, we'll make you the robo-taxi, Elon, but we'll also make a version of that car with pedals and a steering wheel. And that was kind of how it was left. I think what we've learned and what we've reported is that that is yet again the sort of internal conversation being had. And there's real concern that people are just very worried that Musk is not listening and not interested in going down the route of making anything except this robo-taxi that he wants to show in August of this year.
What about the job cuts and the executives, some that have been there for a long time, Craig? That's another thing. And I guess sometimes we jump to, okay, everybody's jumping, getting off the sinking ship, if you will. Help us understand, because my understanding is the cuts were kind of across the board kind of thing, but help us understand that and what that maybe portends or tells us about the company itself.
Yeah, there's a lot of fascinating elements of today's story that sort of moved the ball forward in terms of understanding of these cuts. A week ago, the company announced a more than 10% headcount reduction globally. What we have reported today is that Musk wanted 20%. And the rationale that he gave for that was Tesla's sales dropped from the fourth quarter to the first quarter by 20%. Therefore, we should cut our workforce by 20%. It's unclear whether or not they will actually get to that number, but I mean, 10% would be more than 14,000 people. So we're talking about, potentially more than 20,000 people on the outs. And to your point about, executives, we have Drew Baglino, who was an 18-year veteran of the company, was depending on who you ask, the number 2 or number 3 person after Elon, who decided to leave. You also had Rohan Patel, who was overseeing public policy and business development, was instrumental in trying to make arrangements with the Indian government, and was a major player in Washington every time Musk was going there, sort of arranging meetings for him. He also is no longer with the company. So a lot of people being let go, and including some very important senior leaders.
The devil always in the detail, but it helps us kind of understand a little bit of the chaos and what is really chaos and what is maybe somewhat of a strategy, if you will. Craig, thank you so much. Always appreciate it. Bloomberg News Global Autos editor Craig Trudell. This is the Bloomberg Big Take, and you can find it on the Bloomberg and also at Bloomberg.com/Big Take. We've got a rally underway.
Yeah, we certainly do. Shares of Tesla down 3.6%, but not so the major indices. S&P 500 up 1.4%. The NASDAQ Composite higher right now by 1.5%, and the Dow Jones Industrial Average, Carol, higher right now by 1.2%. NASDAQ 100, higher by 1.5%.
Yeah, and I'm just taking a look at the S&P 500. You got most names in the index higher today, folks, about 473 to be exact, just 30 of them losing ground. And if I look at the 11 major industry groups, all of them are higher. At the top is the information technology, those big mega cap tech names up about 1.8%, and financials also up about 1.7%, your two top gaining groups.
Hey, coming up, how a court shaped by former President Donald Trump will decide the fate of election charges. More when we come back. In the meantime, a check on the trading day. Here is, World of National News, Amy Morris in the Bloomberg 991 Newsroom. Hey, Amy.
Hey, Tim. President Biden talked with Ukraine President Vladimir Zelensky about a foreign aid package that will provide funding for Ukraine, Israel, and Taiwan. Republican Senator Ted Cruz says some parts of the bill hold some appeal for him.
I think it is important that we provide that Israel military aid. The Democrats have delayed that 7 months now.
Cruz also supports a provision that deals with TikTok, which would be forced to divest from its parent ownership or face a ban in the U.S. The president also spoke today with European Commission President Ursula von der Leyen to discuss their support for Ukraine. More than 40 pro-Palestinian protesters were arrested this morning at Yale University. Yale released a statement saying 47 students were arrested and will be referred for disciplinary action, potentially including suspension. The school said it made repeated efforts over the weekend to talk to protesters. Courts adjourned for the Donald Trump criminal trial on this first day. Opening statements, the jury heard from the first witness, former tabloid publisher David Pecker. Court ended early for Passover. And in golf, Scottie Scheffler has won the RBC Heritage with a 3-shot victory. The win is Scheffler's 4th in his last 5 starts, which includes the Masters. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, after the worst weekly sell-off in a year, the major averages all higher right now. 11 major industry groups in the S&P 500, they are up, and we are right around the best levels of the session, I'm going to say. NVIDIA is leading the way. After the sell-off last week, it is now up, 4.3%. Communication services and financials, best performing of the industry groups in the S&P 500. So we've moved from the geopolitical concerns to how much money companies are making. The focus, earnings, slew of company earnings scheduled for this week. That includes 4 of the magnificent 7 cohort of tech mega caps. Verizon, they reported this week. Those this morning, I should say, those shares right now, they are down 4.2%. Overall, the S&P 500 up 64 points. That's a rise of 1.3%. And we are above 5,031 on the index. The Dow Jones Industrial Average of 407 points. That's a rise of 1%. The NASDAQ 100 right now, 230 points higher. That's up 1.4%. Quick look at yields for you. The 2-year yield, that is down just 1 basis point, 497 on the 2-year. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Carol and Tim.
John, thanks so much. Really appreciate it.
Thank you, John.
Well, that historic hush money trial of former President Donald Trump underway in downtown Manhattan. Opening statements happening earlier today. That's certainly on our radar, Carol, as is the Supreme Court's historic consideration of Donald Trump's claim of immunity from criminal charges for trying to overturn the 2020 election. The argument expected to happen on Thursday.
Yeah, there's a lot going on. And as our Bloomberg's Greg Storr writes, that argument is running up against a stark reality. And that reality is that the calendar is as important as the Constitution. Greg Storr is Bloomberg's Supreme Court reporter. He joins us from our Bloomberg News Washington, D.C. bureau. Greg, good to have you here. A lot going on. We're focused on, obviously, what's going on in downtown Manhattan. But having said that, remind us of exactly what is at issue and what the Supreme Court justices have to decide later this week.
Sure. This is the case that Special Counsel Jack Smith brought in Washington, alleging Donald Trump illegally tried to overturn the results of the election. And in that case, Donald Trump is saying, hey, I have immunity under the Constitution. I can't be prosecuted for things, for official acts. And everything I did in the lead up to the January 6th riot was an official act. And so the Supreme Court has agreed to decide whether Donald Trump is right there. And that came after 2 lower courts said, no, you're not entitled to immunity. The Supreme Court's involvement in this case is certainly a big speed bump for Jack Smith.
So we'll talk about the timeline here. If we hear arguments on Thursday, Greg, how long would it take the Supreme Court to hand down a ruling here?
It's really hard to say for certain. The Supreme Court's term ends at the end of June, typically. A big case like this, you would normally say, yeah, it's probably going to be at the very end of the term, late June. The Supreme Court certainly could try to expedite this, given the importance of it, given that they're aware of the possibility of a trial before the election.